Imagine this. It is early 2011. You have £10,000 ready to invest. You decide to take a chance. You put all of it into a small, ambitious electric car company. That company is Tesla. Most people have never heard of it. Many who have think it will fail. But you hold on. You wait for 15 long years. Today is January 3rd, 2026. What is that £10,000 bet worth now? The number might surprise you. In this simple example, it could be worth around £1.5 million. This story shows how that is possible. We will walk through the math step by step. We will use simple numbers to make it clear. It is a story about risk. It is a story about patience. It is a story about the power of time. Big wins in investing often look obvious in hindsight. We look back and think, of course Tesla was going to succeed. But 15 years ago, the future was deeply uncertain. The company was losing money. It was struggling to build its cars. Investing then was a true leap of faith. This essay will not only show you the incredible final number, it will also explore the journey it took to get there. We will see how a few key events turned a risky bet into a fortune. It is a powerful lesson in how wealth can be created. The journey from £10,000 to over £1 million did not happen in a straight line. Our story begins on a day like today, but 15 years ago. It is January 2011. Tesla has been a public company for less than a year. It is not the global giant we know today. It is a small, niche automaker known for one expensive sports car, the Roadster. The stock price reflects this uncertainty. For our example, we need a starting price. To make the math easy, we will use a split-adjusted price. Let us say the effective price you could have paid back then was around $5 per share. At the time, the pound and dollar were not too far apart. So, we will use that $5 figure for our £10,000 investment, ignoring fees and currency fluctuations for clarity. You have your £10,000. You are ready to buy. With a share price of about $5, how many shares can you get? The math is straightforward. You take your total investment and divide it by the price per share. In this case, £10,000 divided by a $5 price gives you a substantial number of shares. You would have become the proud owner of 2,000 shares of Tesla. At that moment, your portfolio is simple. Your friends and family might have called you crazy, but you have made your decision. You are now a part owner of this ambitious venture. Holding those 2,000 shares was the first step. The next, and arguably harder step, was doing nothing. For years, the value of those shares would have been a roller coaster. There were times when production targets were missed. There were moments when the company seemed close to running out of money. The stock price would have plummeted on bad news, testing your resolve. An investor would have had to ignore the noise and the panic. They would have needed to believe in the long-term vision of the company and its leader. This part of the story is not about math. It is about psychology. It is about having the patience to let a good idea play out over a very long time. Your initial stake of £10,000 bought you a ticket to this wild ride. Owning 2,000 shares made you a participant in Tesla's future, for better or for worse. In those early days, the total value was still just £10,000. It did not look like a winning lottery ticket yet. It just looked like a very risky technology stock. The true growth was yet to come. This tool is called a stock split, and it is the next chapter in our story of how £10,000 became a fortune. For several years, you simply held your 2,000 shares. The price moved up and down. But then, as the company grew more successful, something important happened. The company announced stock splits. A stock split is when a company increases the number of its shares to boost the stock's liquidity. Think of it like this. You have a £10 pizza cut into 4 large slices. A split is like cutting that same pizza into 8 smaller slices. You still have the same amount of pizza, but you have more individual pieces. The total value of your investment does not change at the moment of the split, but the number of shares you own does. Tesla had 2 major stock splits after 2011. The first was a 5-for-1 split in 2020. For every 1 share you owned, the company gave you 4 more. Your original 2,000 shares instantly became 5 times larger. So after this first split, your holdings would have grown to 10,000 shares, while the per-share price adjusted down so total value was unchanged that day. Then, just 2 years later in 2022, Tesla did it again. A 3-for-1 split. By now, you had 10,000 shares from the first split. After this second split, your share count tripled. Your 10,000 shares ballooned into a massive 30,000 shares, with the per-share price adjusting accordingly. Your single share from 2011 had now become 15 shares. That multiplication is a key reason early investors saw astronomical returns. Splits help accessibility. It is easier for a stock to go from £50 to 60 than from 750 to 900. Section 4. The final tally. A life-changing return. We have arrived at today, January 3rd, 2026. You started with 2,000 shares, which have now become 30,000 shares thanks to the stock splits. Now, we need the final piece of the puzzle, the current price per share. 15 years of innovation, factory building, millions of cars sold have pushed Tesla's value to incredible heights. For our example, let us assume a single share of Tesla is trading for about £50. This is a hypothetical price for our story, but it helps illustrate the final outcome. The final calculation is the most exciting one. You take your total number of shares and multiply it by the current price per share. You are holding 30,000 shares. The price is £50 per share. So you multiply 30,000 by £50. The result is a staggering £1.5 million. Your initial £10,000 investment has blossomed into £1.5 million. That is 150 times your money, a 14,900% gain. A broad index might have turned 10,000 into 30 or 40,000. Fantastic, yet tiny beside 1.5 million. But massive rewards came with massive risk. For every Tesla, many companies fail and wipe investors out.